In Chapter 8, you were introduced to petty cash. So, petty cash is going to be for smaller purchases, right? So you have these journal entries surrounding petty cash. So let's work through this example. On May 1st, you established a petty cash fund of $200. And then, a couple weeks later on the 14th, you replenished the fund. So the fund at the time only had $15 in it, but when you went to replenish the fund, you also found receipts for postage, travel expenses, delivery expenses, and miscellaneous expenses. And then on May 27th, you decide that you need to increase the petty cash fund from $200 up to $290. So this first journal entry, to establish a petty cash fund of $200. Well, to establish a petty cash fund, the first thing you need to do is debit petty cash, because we need that account to increase. Now, what are we going to put into our petty cash fund? Well, we're going to put cash in there, right? So we take out of our cash and we're putting it into petty cash of how much? $200. Right, just the amount that we are establishing this fund for. Now, on the 14th, we are replenishing the fund. Told us the fund contained $15 at the time. There were receipts for postage of $78, travel expenses of $44, delivery expenses of $28, and miscellaneous expenses of $11. So, the first thing that we need to do when we make the journal entry to replenish the petty cash fund is to debit all of our expenses. So we had postage expense, travel expense, delivery expense, and miscellaneous expense. So that's step number one, is we first debit all of the expenses that we have. Then we think about replenishing this fund, right? Our cash goes down. So we have to credit our cash in this entry as well. And you'll notice there's a bit of a gap between miscellaneous expense and cash right now. And that'll come into play here in a bit. Now, let's put in the numbers that we know. Postage, they told us that was $78. So we'll debit postage expense for $78. Travel expenses, well, we know that's $44. Delivery expenses is $28. And miscellaneous expenses is $11. Now, cash, we're going to have to calculate our number here for cash. The way that we do that is we start at the $200 mark that we established this fund for, and we subtract out the amount that was left in the fund when we went to replenish it. So 200, where we started, minus the 15 that we have remaining, gives us this 185 that we need to credit cash for. So, if our debits and credits equaled right now, we could move on with our day and go on to the next transactions. However, if you add up all of your expenses, you'll get a total of 161. So, your debits and credits don't equal, which means we need to put another 24 over on the debit side. But why? Well, we had receipts that explained where $161 went. But, for some reason, we're missing $185 of cash. So we were short some cash. And because of that, we need to debit cash over and short of $24. So now our debits and credits will equal. This last transaction, increasing the petty cash fund to $290. Well, we're going to debit our petty cash and we're going to credit our cash. It's going to look pretty similar to what we did in the first entry. But here's how we figure out the number here. If we make a T account for petty cash, going into this day, the only transaction that's affected the petty cash account itself is that first one where we debited 200. Well, we want the account to end up with a balance of 290. So, what are we going to debit to get from 200 up to 290? We need to debit 90 more to petty cash. So, we put 90 in for petty cash and cash.